That's sweet. My connection just totally went out. Are we live?
Yes, we are live. Here we are live. Go ahead, Heidi.
Hi,
That's
everyone.
how we do it.
Welcome. Welcome to the second episode of Crypto Q&A. I have with me Blake Anderson, a cryptographic economist extraordinaire. I also have Vortex, who is the founder of the CryptoCast Network. So welcome to the live stream. I hope you guys have some great questions planned. We would love to answer them. Just to get it started off, I wanted to raise some questions about usability of Bitcoin and cryptocurrency in the world. You know, a lot of people saying that's how mass adoption is going to be achieved. So, let's see. Okay, so maybe start with Blake, since you are our special guest. What are some applications of Bitcoin or other cryptocurrencies that you see could bring, efficiency and transparency in maybe an unconventional way?
Efficiency and transparency in an unconventional way. I mean, that's a really good question. I know that there's some people like Ubiquity and Ragnar that do blockchain real estate. I think that that's a much more tenable use case than something like medical records, because medical records are highly private, but things like who owns what physical property, that's a good use case for blockchain consensus. Because we want to think about this as like it's a consensus protocol. What blockchain can kind of be thought of as is the blocks are like nodes. If you run a node, then that's a block. And then the chain is like a protocol that makes sure that all the databases are in sync with one another. So that's really, really, really good for like real estate ledger keeping or for cryptocurrency transactions, but might not be the best for some of the other use cases that boil up and that are talked about. So I think that it's interesting to look at where do we need consensus in a global type of financial market. Remittance refers to money going from country to country. I think that adding liquidity to remittance channels is a huge way that we can offer value. Unfortunately, a lot of these things are very, very fundamental and very kind of almost nerdy economic style. It's not maybe the most attention-grabbing use case, but I think that these types of use cases will really upset the current availability of these technologies. And then as we layer out the applications and stuff that we can do on top of blockchain and then settle down, we'll see a lot more exciting use cases. But for right now, I think that the biggest low-hanging fruit is going to be remittance and things like titles on blockchain.
Interesting. So yes, maybe more of like a base layer fundamental change that maybe people will all of a sudden realize that things are suddenly much better, not necessarily like a new shiny object like Bitcoin or something. Vortex, do you have any, or what are your ideas?
Sure. So, I mean, there's a lot of different things floating out there in the space these days, a lot of research being going on. I think all the terms being thrown around these days are, I'm sure Blake knows them all too, crypto asset, crypto network, crypto commodity, all of these crazy different things that people are inventing these days. But really, in my opinion, I really like the idea of more of open finance with Bitcoin. A lot of the Ethereum people are trying to use this word called open finance. They're trying to use this term, but in my opinion, like Bitcoin does the best open finance around. So a couple examples are like BISC. This is a decentralized exchange. So I think this is one great use case for this type of technology is to decentralize some of these centralized systems that have a lot of fat and a lot of middlemen. And so something like BISC, which is a decentralized exchange, which allows you to actually trade, crypto and fiat in a much more decentralized manner than anything that we've ever seen before. So I think that's a great use case. This is really early days. Again, let's preface with that. So there's not a whole lot of liquidity in these types of decentralized exchanges, but these things are going to get bigger and they're going to become more demand, in my opinion, because a lot of these centralized exchanges are all KYC. They're all have huge amounts of AML and all of these things. They really want your next of kin at this point to be able to use their system. So I think that there's going to be demand for these decentralized exchanges, just like what we're seeing now with Shapeshift. Shapeshift was a pretty big integration to the company. Shapeshift had pretty big, huge integration into the ecosystem. It's pretty much integrated into all sorts of different wallets and things like that because it required no accounts. But now they're going to the KYC route, right? So I think that there's going to be demand again for something that is an open source, non-KYC version of Shapeshift. So I think that we're going to see a lot more of these decentralized solutions. And then another example would be something like BTC Pay Server. This is just some amazing software written by somebody named Nicolas Doyer. This is something that is an example of, again, allowing you to take sovereignty, take ownership, take responsibility over your money. And so what this does is this allows you to be your own merchant processor. So this allows you to accept crypto payments for your business, for your website. And I've been tweeting about it all week, trying to tell people about this amazing product. It is open source, it is free, and again, allows you to accept crypto for your business really, really easily. In fact, out of the box, and it even supports Lightning now. So that is a great. So it's almost like the best implementation. The best way to actually get up and running with Lightning is to just download BTC Pay Server. So again, this is what I think is going to be a big use case for blockchain, specifically around Bitcoin and cryptocurrencies, is kind of again, so this idea of open finance, allowing people to take control of their money.
So speaking of people taking control of their money, I do have a pretty appropriate question in the chat box. It's asking about the safety of running a full node, the best way to support a decentralized network and connect your wallet to it. If you are not a super tech savvy user, I'm thinking about if security, firewall, node update, and whatnot. So what are some tips for people who maybe want to run a full node and just some things that they need to be aware of? Blake, would you like to answer that?
If you're an advanced user, it's great to run your full node, then have like an SPV wallet or a type of wallet that you want to connect back to your full node, so that you know that your full node is what you're getting. If you're not a super advanced user and you have a full node that might be flooded out by different other nodes connecting to it, and you're not able to check up and ensure that that's not happening, I would advise you to make sure that you understand the situation very, very well before you take things into your own hands in terms of doing something like that. It's one of the drawbacks of blockchain technology is that we're basically using like bearer asset transfer that's live and it's irreversible. So you want to make sure that you don't make any mistakes. So I would encourage you to try to fully understand what you're doing, and then once you get a good grasp on what's going on, running and managing your own full node confidently, and then having your other applications reference your full node that is stable and has good connections to the network. I mean, it's a good idea, but again, a huge part of using blockchain technology effectively is to make sure that you understand what's going on, and that you know that you have a bank in your pocket, and that you're responsible for the positive rights to settlement that's represented by your keys. If your keys get lost, it's not even technically theft. It is actually more kind of like fraud, because it's not theft recognized by the system. It's somebody that has gotten your positive rights to settlement keys, your contractual obligations to be able to go and get that. So it can be a little bit muddled, a little bit confusing. And again, I think that the best way to make sure that you're protected from any types of losses are to do as much research as you can on your own terms. It's not something that I'm going to be able to go over completely in the type of format that we're in right now.
Maybe if you have links to information, you can share that in the chat box as well. Vortex, do you have anything to add about the importance of running a full node, or your thoughts of the best practices for doing this?
Sure. Yeah. So Blake had a lot of great points, but what I want to echo is that running a full node is more right now for an advanced user. We of course try to encourage people to go ahead and run their own full node, because that again allows you to 100% be in control of your finance, not have to trust a third party to verify transactions. So that is an important part about being a full citizen of Bitcoin, is to actually run your own full node. But that's not a requirement, of course, to use Bitcoin. We also for the new people out there, we do want you to know that there are easy ways to run Bitcoin too. You can just use a wallet as well. You can use a third-party service if you still need your hand held a little bit. There are services out there that are federally insured, like Coinbase. But of course, you'll always hear from people like myself and Blake that we highly recommend that you do the research. That you actually do that you actually learn why it's important to not use those services, and why it's important to actually run your own full node and hold your own private keys. Because remember, Andreas says it all the time: if it's not your keys, it's not your Bitcoin. So there is a lot of great information out there for running your own full node. In fact, there's many sites that have tutorials for you, including video tutorials. Again, this is the information age, right? So there's at this this point, no barrier to entry at all for the knowledge of any of these things. It's just the will to go out there and actually search for it. So again, you know, this is a new financial paradigm. This, again, Bitcoin allows you to be your own bank. So we again ask that you do the research to actually hold your own keys, do the research to get a private, get a hardware wallet and a full node, and allow you to be able to, again, verify your own transaction. So again, this is really new, and we're all learning together. There's a lot of stuff, there's a lot of stuff to take in. But hey, the information is out there, and you know, there's people out there like myself and Blake that are trying to educate people, and you know, we're definitely more than happy to answer anybody's questions about that.
Very nice. It's very generous of you. So yes, going more along the lines of like offering decentralized options for things that we are been accustomed to, things like atomic swaps, is kind of takes away the exchange aspect. So I had a question. What do you think of the atomic wallet? Is it safe to use? Blake, would you like to answer that?
Well, I don't have any experience with the Atomic Wallet directly, but if I look at the development path so far, it seems like it does have users. There are a lot of people using it. Atomic Swaps is a little bit more advanced than the kind of intro user experience here, but before you use any type of solution, you definitely want to go and look at what other people's experiences have been. Twitter's really great for that. If people have complaints, then you can just search the name of the wallet, and you can look at what their complaints are, and you can put complaints generally into two categories. Is this a complaint where the user knew what they were doing and their money disappeared, or is this a complaint from a user that didn't know what they were doing and eventually got support and then understood the type of error? I briefly brought up Atomic Wallet and did that search, and it looks like most users are happy. But again, what we're engaged in is trustlessness and expanding the circle of trustlessness. So you want to try to minimize trust, which is why it's good to run your own full node, which is why it's good to hold your own keys. And trustlessness means that you have to basically, to some extent, be your own source of due diligence, your own source of information. So education is a huge part of security and trustlessness. I saw somebody in the chat asking, aren't these things that could maybe deter some users from what's going on? And it's like, yeah, they definitely could. There are reasons to be deterred from this type of technology if you don't want to have bearer assets that are in your control, that there's no reversals on. But at the same time, the value proposition of deflationary ground up currency that is not going to be inflated in the future, that's a very, very strong value proposition. So there's risks and benefits to everything. And the information overhead that you need, yeah, that can be a bit of a pain in the butt, but it's going to pay off in spades, because if you're willing to take on that information overhead to get over that lump early on, then you're one of the early adopters by definition, and your benefits, if you hold on long horizons, should be much greater than those that wait for super easy guarantee solutions to come down the pipe later on. So keep all of this in mind, that there's trade-offs with everything.
Oh, absolutely. The early bird gets the worm, but he's got to wake up early and he's got to look for him. So Vortex, do you have anything to add to anything, maybe thoughts on the Atomic Wallet itself, or this whole idea of investing your time in education and reaping the rewards that way?
Yeah, I mean, Blake covered it brilliantly. Blake's killing it tonight, of course, as usual at this time. So there's not much really for me to follow up. But, again, guys, look, the gentleman mentioned in the chat, that will this deter users? And, of course, Blake said, of course, this is going to be difficult stuff. But, again, guys, this is like learning, HTML in 1995. This is just really, really important knowledge. This is learning email and HTML all together in 1995. Imagine if you've done that, you will have done pretty well in your career and in your life, because the internet, of course, today touches everything. So this is going to definitely pay off in spades when you start learning about Bitcoin, when you start learning about wallets and running your own full node. This is going to be how finance is done in the future. It's going to be far more crypto. It's going to be far more in your own control. And so there's going to be more responsibility. Now, of course, there will always be centralized services there ready to hold your hand, but those are the services that are going to go down, get hacked, get bailed out, just have all sorts of issues more than likely down the line. And that's something that you won't have to worry about if you do the research and take the responsibility of again, being your own bank. So we don't want to scare new users off too much and deter them too much, but we do want to make them aware that there is this opportunity here. There is this big old huge flashing exit sign that you can take away from the crazy financial system that is destroying the world basically at this point, with negative interest rates and inflation, with fiat, and one fiat going down after the other. There is this big exit sign waiting for you, and it is available, to anybody with an internet connection. So I just advise people, look, this is an amazing opportunity, and it's not going to be around forever. The internet, it was growing at one point at thousands of percent. It's now growing only 10% a year. So there's going to be a time to get into crypto, and now is the time, because in 10 years from now it'll pretty much be over and figured out. Pretty boring.
Yeah. Sorry, there's a blender happening behind me. I'm at a cafe in Bali. Welcome to the world of traveling. So, sorry, that totally made me lose my track of mind. So what you were saying?
we love the traveling, Heidi. We love the traveling. This is what it's all about. Is the imperfections. So so please keep going.
Just on the importance of educating yourself and investing your time to reap the rewards. I myself, I'm not I don't have a particularly financial background, but I became, kind of obsessed with this whole cryptocurrency and blockchain technology thing. And I just threw myself into it. And here I am talking to Vortex and Blake Anderson. So yeah, I mean, talk about a whole, an open source utopia of people just being able to learn something and share with other people and then build on that. So it's a really cool thing to be a part of. So, okay, I do have a question. I'll get back to the chat box in a second, but Vortex, maybe I'll start with you so you can get in a good answer. Are there any maybe particular applications being built on either the Bitcoin blockchain or any decentralized blockchain that you think is particularly appropriate for providing something like censorship resistance or anything like this?
So, privacy right now in Bitcoin really is becoming a major topic that everybody is discussing, from podcasts all the way down to the actual core developers themselves. This is, again, guys, I try to remind people that it is early days, so we're still building out the actual infrastructure, the wallets and things like that. But there is just a ton of work being done on this infrastructure, on this really the nuts and bolts of Bitcoin, and that includes privacy and scalability. So and we have something like the Lightning Network that's going to give us both, the privacy and scalability. So what I'm really focused on now, what I'm looking at is all the development around Lightning Network. So there's a lot of work being done around there. Again, it's a little bit early days, but we're getting wallets now that look really, really good. They're starting to look mainstream, very iOS-esque, and we're starting to combine Lightning and Bitcoin into the UX in a very seamless way. So I'm looking forward to seeing more of that. There is, of course, now in the privacy app realm, there is a lot of work being done. But so let me give you one example. Mr. Nopara73, Adam Fisker, he's working on the Wasabi wallet, and Blake was just, I believe, partook in a great conversation on Block Digest where they interviewed Adam Fisker. So I recommend everybody to go check that out if you want some more details. But there was a great conversation there where, again, he explains the reasons why he created it, and it's all about privacy. It's all about individuality. It's all about censorship resistance and this idea of this permissionless value transfer. And so that's what I think Adam really has in mind. He really wants to keep that alive, and I think that they're doing that with the Wasabi wallet. So again, early days, but just amazing and fantastic work being done in that area. So lots of stuff being done right now, specifically in Bitcoin, around privacy. But again, the Lightning Network is kind of where where all the talk of the town is happening.
Okay, Lightning Network on the list. So, Blake, do you have anything to add, or what are you looking forward to?
I was just going to jump in really quick. We were hanging out a lot in the Block Digest room the other day, but actually that interview I was on WCN with Max Hillebrand and Nopara Adam Fizor. I'm not sure how to pronounce his real name. We're all used to handles and throwing those around. But yeah, it's really interesting. What you can do with the Wasabi wallet is you can coin tumble, and you can basically you can obfuscate the path of coins and what's been going on. And the reason that that's important for privacy privacy is good. Everybody wants privacy, but more fundamentally, there's a concept in economics called fungibility. Like gold is fungible. One lump of gold is just as good as another lump of gold. Take out like the carats and purity and stuff like that. But for the sake of example, pure gold is just as good as pure gold. Other things can maybe be not as fungible. At the extreme example, if you have dollar bills that were used in a bank robbery and they have their serialized numbers on them, they're not as fungible as other dollar bills because they were, in a crime. This is a good allegory or kind of example to use in terms of Bitcoin, because what can happen is if there's a coin taint, you don't want to have tainted coins. You want to be able to tumble coins together and have them come out as clean, because the amount of clean or taint that a different Bitcoin transaction has actually directly impacts its fungibility. And we want Bitcoin to be fungible. We want one Bitcoin to be as good as any other Bitcoin. We don't want dirty or tainted Bitcoins to be traveling around in one pool of value and then clean Bitcoins to be charged at a premium. We want technologies that enable privacy to make it so that all Bitcoins are fungible. And then sometimes there's lines drawn in the sand and then battles that are fought by cypherpunks versus people that want these really, really big, viscerally powerful on-ramps, and they want to have KYC, AML, and empower people like Coinbase to, or not Coinbase necessarily, but for an example, Coinbase may be one of the people that would want to have an interest in lots of on-ramps, and so they would want to do more chain analytics. This was a big reason why people were anti-companies like ChangeTip a long time ago. We loved ChangeTip and we loved their services, but the risk of having your social media ID handle tied to different coin inputs and outputs was a very, very serious form of chain taint. So it gets all the way down to how much do you want privacy? How clean do you want your coins to be? And if you really want them to be clean and you want privacy, you can actually run your Bitcoin full node on Tor or VPN routes that go out of your computer, so that even if your ISP is sniffing what's going on, your ISP cannot know what wallet is yours or what transactions you are going in on. So Bitcoin is great. It's usable to people that have a mild understanding of this stuff. But in terms of how deep the rabbit hole goes and how much there is to consider with this basically new field of science, this new field of computer science, it can go pretty deep. So a lot of people are excited about privacy for privacy reasons, and then also in terms of all the way down to economic concepts of fungibility. So it becomes an important issue. And we did a show about just over 2 hours yesterday on the WCN about a Wasabi wallet. We installed it and we did an obfuscation maneuver to clean some coins, and you can go ahead and watch that.
Yeah, Block Digest, WCN, CryptoCast, it's all the damn same, people.
So yeah, this is interesting too, how like Bitcoin is kind of inspiring more conversations about, economic strategies and how these coins and things work with people and how they're used. So I think that's something that definitely needs to be more mainstream, that people don't question. And if they did, they would probably find themselves on the side of Bitcoin anyway. So speaking more about like the economics of a coin, there are some that are designed to be stable or pegged to, like, say, the dollar. And that is something that is probably attractive for people like merchants or people who want to use cryptocurrency, in daily life. So what do you think of stable coins like DAI or Tether? Like, it seems like this might way into mainstream adoption, like for merchants to avoid 3% fees. So Vortex, what are your thoughts on stable coins?
So I'm really looking forward to Blake's answer on this, because of course, being a crypto economist, he's going to have all sorts of great answers and use really large economic words. So I'm looking forward to that. But let me just give you my quick little my low level understanding. So personally, I think that these stable coins are a very temporary use case. I think that they're similar to Coinbase, and where they just are an on ramp to provide liquidity so that people can get in and out of crypto easily. And so I think that they're going to bring more liquidity into the crypto ecosystem, but of course they also provide a danger, because again, it's nothing can be pegged correctly forever. The idea of pegging anything is a fallacy at this point, with the networks and with the fraud that goes on in the financial system. So pegging things to the dollar, it's kind of a ridiculous notion. We're going to peg something to something that we think is stable, but in fact is not. The US dollar has lost 97% plus purchasing power, and we're trying to peg coins to that and think that they're going to be stable. It's kind of a nonsensical non-starter idea. But again, I can see the use case to bring in and on-ramp new users into the system, to be able to provide liquidity, to be able to go in and out of the coins, so market makers can, again, provide more of the liquidity into the system as a whole. So, Goldman just, I believe they're just I believe that they just spoke about launching their own stablecoin. We have USDT, we have USDT, and then we have Tether TUSD, and we have True USD. And so there are a bunch of these stablecoins are going to continue to come out. And I think that now I think Goldman's is going to be on the Ethereum blockchain. Again, it's just really crazy when you're talking about a stablecoin that's on an Ethereum network with huge amounts of volatility pegged to the US dollar currency, which again has huge volatility over time. So it doesn't make a whole lot of sense in the long term. But again, it's a short-term play. It's going to get more liquidity into the system. It's going to make it easier for traders to get in and out of crypto because, again, the US dollar, guys, it's not digital. You know, it's really, really not digital. It's just numbers in a mainframe. It's not actually digital. Bitcoin is actually truly digital. It is born on the internet. It is born in a digital realm. So it is in fact truly digital. But the traditional financial system, this is why we have to create these stable coins, because they are not born on the internet. So again, it's a temporary bridge from the old world to the new. I don't think it'll be very useful in the future.
Yeah, they're kind of like the training wheels for people to get into cryptocurrency. They have like that comfort of knowing, oh, it's like $1. So yeah. Blake, what are your thoughts on this topic?
Well, it's a very good way of saying it, like training wheels. It's an interesting concept. When I went to a cryptocurrency meetup or conference a long time ago, I can't remember which one it was, but Brock Pierce was there, and we were talking about market inefficiency and how market inefficiency and price discovery mechanisms work. And there's a concept called arbitrage. And arbitrage refers to striking a series of matching deals in unison where you can increase the net value of the things that you have. It's like one of the oldest professions would be delivery, like camels bringing incense and myrrh across the desert. You bring them from where they're cheap and you sell them where they're expensive, and it makes the trip worthwhile. When Vortex is talking about Bitcoin is truly digital, it means that it is a digital asset. There is no physical backing element of it. It's backed by scarce ledger space, by the commoditization of energy, the fundamental commodity of the universe. And what that means is basically that the IOU and the unit of value are tied together. There's no IOU to go into lend out and then have the hypothesis of if that gets lent back, then you can rehypothecate things and make this daisy chain lending of what we saw kind of basically fall apart in 2008. One of the reasons that we want to have these really, really secure systems is we don't want to have the economic turmoil of lending, fractional reserve lending, leveraging, and rehypothecation. So that gets made impossible in Bitcoin because the IOU is fused with the unit of value. It's not impossible if certain things start happening. And basically, to go back to what we were talking about, which is stablecoins. Stablecoins are useful for arbitrage because then you don't have to settle into USD. You can go from Bitcoin to Litecoin or Bitcoin to whatever this stablecoin is, and it helps with arbitrage methodologies from exchange to exchange. This price discovery and inefficiency correction can be increased. It's good for the exchanges, but there are several drawbacks. There are drawbacks in terms of people don't know if the tethers that are being printed are real or if they're not representative of real money that's available, if there's front running going on. There are definitely downsides to stable coins, aside from the fact that a stable peg is really hard to achieve. People can attack it with various different trading methods to try to make it go down underneath a certain price because they know that there's this quote unquote effort to keep it somewhere priced into the market, and then that can motivate traders to try to hammer that peg up or down. So there are many problems with it, but again, having training wheels isn't something that doesn't have benefits in certain situations. So you have to look at the good with the bad, like with anything. And hopefully I illustrated to some extent what the benefits are and what the drawbacks are of having a stable coin or a tether. I think when Brock Pierce first implemented the tether system, it was called real coin. It was supposed to have a real value. Then they changed it to tether. Economically speaking, what tethered value means is like gold has a tethered value to its real world use cases. You could make circuitry out of gold, or you could make fillings with gold. So you would expect for it not to trade for an extended period of time below what the real world value is. So to call your stable coin tether, I think it's kind of funny. It's a very, very confident thing to call a stable coin. So I think that few people get what the tether name means, because they thought, real coin, that was a little bit overconfident, and tether is kind of a dial back, but no, it's kind of a double down in that direction that it's a tether. So I think that's a funny thing to point out about the tether stable coin.
Yeah. So let's see. Talking about how stablecoins are kind of like an on-ramp to cryptocurrencies, and how, you know, we're moving from, hopefully, from centralized exchanges to decentralized exchanges, maybe investigating or applying, getting more like atomic swaps and like instant exchanges from one coin to another. I'm curious, do you think it's realistic to think that there will be like one cryptocurrency in the end, or like, because if you're thinking about it, if there's these applications of like, just if it's most convenient to, say I have Bitcoin or whatever, and I want an application that accepts a different coin, and it's like the most convenient just to switch it instantly, wouldn't it be ultimately just convenient just to accept one cryptocurrency for everything? So what are your thoughts on that, Blake?
That's a very, very good question. Bitcoin is it's a protocol and it's node infrastructure. And if we look at what other successful protocols have done to scale, they follow what's called the OSI model. It's like 7 layers of scaling from the base layer and like hardware all the way up to application and security layers and stuff like that. And that's a good way of understanding Bitcoin. So if you want something that you can't do with Bitcoin on the base layer, one of the reasons that we wanted SegWit and those hooks to activate on the base layer is so that we could build things on top of it. Building things on top of that settlement base layer makes it so that Lightning and things like that can eat the lunch of other coins that were supposed to be cheap to transfer around a lot. So what that basically starts to mean is that if the fundamental value proposition of what's going on is negative versus positive rights in a balance where we can expand the circle of trustlessness, it begins to make sense. So I mean, like I kind of have to unpack what I just said. So there's negative and positive rights. There's liberties and entitlements. Liberties or negative rights refer to a obligation of inaction on behalf of other people. All you guys have to do to satisfy my negative right to life is not kill me. You guys don't have to do a whole lot to not kill me. You have it's an obligation of inaction. Obligations of positive actions generally almost always need to be grounded in tenable contract law. If we have a contract where you're entitled to something, then that entitlement can be satisfied by a contract that has mutual assent, true meeting of the minds, and then we can expand this circle of trustlessness. The problem with expanding the circle of trustlessness with contracts is that they have to be enforced by the government. The government's not really good at doing things super dependably. So what we have with Bitcoin is the first time where we can have the positive right to settlement on a global jurisdiction that can be done trustlessly. There's no trust involved in it. So that being the case, the more decentralized that Bitcoin is and the more nodes that it has, the more the trust proposition is increased in terms of there's so much stuff going on to support this network that we can really, really, really trust to a maximum extent until it breaks the meter, that it becomes literally trustless. And then we have a trustless application layer built on top of the base layer where we can expand the circle of trustlessness to make it so we don't just have to leave each other alone in society. We can actually go out and make markets and do all this stuff where the most fundamental thing that's most important in our interactions, which is settlement and value transfer and value language, now works and operates. Altcoins kind of fundamentally violate this because they're saying, hey, move over to this super weak trust proposition to get the same thing. And it's like, that's not the best. And I think that this is the best metric to think about when we think about what's the real Bitcoin. Is it Bitcoin or Bcash or this or that? It's not necessarily about hash rate. It's not necessarily about these different types of metrics. It's about how strong is the proposition of trustlessness in terms of network effect. And if you look at it from that way, building on top of Bitcoin so that we can have these applications that can do things that we want to get from other altcoins, if we do that on Bitcoin, it has the strongest continual value proposition. And I think that that's a really, really, really good bottom-up way of thinking about it in ways that it'll be really hard for people to assail your understanding and to sell you nonsense.
That was a very good answer. So that's super interesting too. You know, the reputation that Bitcoin has, you know, gained over the years. It's something to be reckoned with, and the fact that, you know, the layers. It's yeah, probably a lot more beneficial to build on top of. Vortex, do you have anything to add?
Yeah, so I mean, that was again Blake killing it tonight. Thanks for that information, Blake. I always learn a lot, of course, whenever we have you on any of my shows, Blake. So I try to definitely have him on a bunch of my shows. You can, of course, follow him at Bitcoin Blake on Twitter. But basically, you know, at the end of the day, everything that Blake said is correct. I mean, money is a language. You know, it's it is always beneficial when everybody speaks the same language. Once we speak the same language, we can then start building things on top of that. We can start building things together on top of it. And of course, there's all of these theses out there, like, you know, fat protocol or fat money and all these different things that these hedge fund managers are putting out these days. It's getting kind of crazy, the mental gymnastics that they're starting to come up with. But really, what's important to understand is that Bitcoin does have these network effects that are just almost insurmountable. You can't escape from these type of network effects, which is why a lot of times people refer to Bitcoin as a black hole, the black hole of money, because these network effects just suck in, just push away everything and suck in all the value, push away all the competition and suck in all the value from the competition. And so, when you have a hard money like Bitcoin going up against some of these altcoins, some of these ICOs and fiat currencies, I mean, backed by nothing other than a flag, there's just no comparison. Bitcoin will absolutely eat their lunch. It's like, it's like almost back in the day, like the dollar going up against beads. There's just no comparison. And so, another point, a great point that Blake made that I want to echo is that, Bitcoin has is using this layered approach. This is what this tried and true trusted method of network security, of computer science, that has been used for decades and decades in the past for everything, from hardware to software to protocols. We always add layers so that we can scale properly, because every layer has a very specific purpose, does its own things, as Blake described, has its hooks that goes up and down so that they can provide benefit and to all the layers above and all the layers below. And so this is just a really important concept to understand in computer science, because there's some people that are trying to tell you that we can just completely scale on chain, that we can just put every single transaction ever in the history, of course, of man and Bitcoin, and that'll be great. And that's just kind of nonsensical when we're talking about scalability, trying to scale these systems. And as Blake said again, it is scaled with layers. And so, another important thing I want to mention is that, any feature that some of these altcoins are trying to tell you is that Bitcoin doesn't have, Bitcoin will eventually have. Some of the big ones that people were talking about were privacy, like, Monero and Zcash, they can eat Bitcoin's lunch because of the privacy. But it's like, look, guys, we've launched Lightning Network on the mainnet now. Lightning Network is could just be as easily as called dark net. It might as well be called darknet, because it is so secure and private by default that it is the scaling of the privacy solution that Bitcoin needs, that can just, again, completely eat the lunch of some of these other altcoins that just make them superfluous. So when you see these network effects of Bitcoin, when you see Bitcoin continuing to grow, and you see the additional features that it continues to adopt, and not just just a feature being a feature, but every feature in Bitcoin is scalable globally. It's the absolute efficiency. If you look up efficiency in the dictionary, you'll find many of the parts of Bitcoin's code, because this is what has been honed of years and years of studying this. There's more Bitcoin source code has probably been peer reviewed by more people than anything else on the planet. So this is just again, important to understand that in my opinion, Bitcoin has no competition. The value proposition for Bitcoin is that it is going to be the world's store of value, sound money. There's nothing else that is trying to do that. There's nothing else that's actually trying to directly compete with Bitcoin. So when you see it from that angle, when you see that, okay, Bitcoin has no competition, nobody's trying to compete with Bitcoin, it has these network effects that continue to prop it up year after year, making it more and more powerful, which have, which then affect, in turn affect additional network effects that then affect additional network effects that then, of course, compound and then just make it so that you can't even compete with it. So when you see all this, it just, altcoins and ICOs and these things, they just don't make a whole lot of sense.
Sorry, my mouse wasn't working there for a second. Yeah, Lightning Network could be called Darknet, but then it had to be rebranded in like 6 months. So there was a good question I saw talking about financial industries and how do you think they will eventually adopt Bitcoin? Would it be mostly custodianship, or this person asking the question, he's saying, it's scary being a senior working on my business econ degree, knowing what's to come. So someone who's looking forward, trying to plan their future, if they're going towards a financial career, what do you see the adoption happening for those types of industries? Vortex?
Actually, let's go with Blake first on this one. I went first on last. Let's go with Blake on this one.
All right, subverting the host. I see how it is. I'm just gonna do whatever I want to. I'll be like, woo, nobody can control me. I'm doing what I want to. Well, I want to say thanks to Hunter Brennan for the question. He's actually a good friend of mine who lives up here, so I thank him for his support. He's a young finance student who knows a lot more than I knew when I was his age, so good on him. And he's asking about the use cases for crypto in the institutional investment space. I believe is it Caitlin Long who's been talking a lot about warning about hypothecation and rehypothecation. I kind of touched on this earlier. Hypothecation basically means that you have lent something to somebody else. Like, let's say I have a car loan, and then this person has the car loan with me, and a car loan is great because if I don't pay, then they can come take the car, and they can take the whole car all at once because I've violated my contractual agreements. So it's pretty safe to do a car loan. But what they can do is they can hypothecate the car loan, and that means that based on the hypothesis that I'm going to pay it back, they can sell it to somebody else. And then rehypothecation refers to the daisy chain after one layer of doing that multiple times. And what risk this can what risk this can cause is that you can have on paper 5 car loans when really there was only 1 car loan. So that makes this pyramid of, if the one loan on the bottom gets pulled out, there's a whole bunch of stuff that goes wrong there. And when we talk about ETFs and institutional investors, I think there's a law. If you have more than $150 million of institutional investment on the book, you have to use certain custodians that are going to engage in hypothecation and rehypothecation. It's one of the ways that they make their bread and their butter. So the risk of hypothecation and rehypothecation with Bitcoin is very, very, real and not good. It's one of those ways of, before when I said that you have the IOU and the unit of value settlement fused together, it's a way of kind of lending on that and ripping those two apart. So hopefully, with being able to audit different addresses and stuff, we come up with a solution to this. But it seems like in a best case scenario, the institutions will get involved in Bitcoin by being responsible custodians and having transparent accounts where people can audit what's going on using certain key relationships and stuff like that. And in a bad scenario, what we'll end up having is a big paper Bitcoin market where they use various different other assets to cover their ass when things start to go south, and then we'll have a big bubble inflated and then it'll pop. So again, Caitlin Long writes a lot about this. She's a very, very brilliant woman who has 20 or 22 years of experience on Wall Street, has a pretty good understanding of Bitcoin, and she's kind of like a Paul Revere going and warning people about hypothecation and rehypothecation. So I think that's one of the risks of the legacy system getting involved in institutional investors, and the benefits obviously are to the moon and lots of on-ramp and lots of good stuff. So I think it's important to weigh the good with the bad in terms of looking at what's going to happen in this situation. Lots of change. Here's the good stuff. Here's the bad stuff. So that's what I have to say about that.
Yeah, scary things. Let's not have a 2008 crisis with Bitcoin. Vortex, do you have anything? What are your thoughts on hypothecation and paper assets with Bitcoin?
Sure. So basically, again, as Blake said, Caitlin Long has been warning about this for a little while now. She's had a couple of articles and a podcast, and but in my opinion, personally, I just don't see us going down that particular route. I'm very glad that she's out there warning people of this, because if we don't at least warn people, then of course we can be completely blindsided, and that's what we don't want. We don't want a 100% paper market that'll just create a bubble and then pop, and that have another 2008 financial crisis. So personally, I think that what we're going to see is we're going to see competition in the markets. I think we're going to see what we always see, which is people trying everything, trying all things and seeing what actually works. So I think that there's going to be people that are going to try to do like 100% paper. I think there's going to be competitors that try to do 100% physical delivery. And in my opinion, all the physical delivery is going to win. It's going to win out. They're going to be able to prove their reserves. They're going to be able to have they're going to be able to assure their investors. People will be able to have a lot more. I think that'll be a lot less risky. So I think that they're going to get a lot more demand, and we're going to find out, which one is going to work. Because I just don't see us going down another 2008 paper route financial crisis with Bitcoin. And if that does happen, if it does get inflated, paper inflated away, well, look, all the people holding Bitcoin are still good, because one Bitcoin always equals one Bitcoin at the end of the day. So if you're holding Bitcoin, you're going to be fine. But if you're holding these paper assets, of course you're going to get wrecked, as you always would with any paper asset. So again, I'm glad that there's people out there like Caitlin Caitlin Long, sounding the warnings, but I just don't see us going down that route. I see that the physical delivery, I think that that's going to be the one that's going to win. And, either way, we at least educate the world more about Bitcoin.
I want to jump in really, really quick about what you said, because I think you made some really good points. There's different examples that we can make about the rehypothecation risk with Bitcoin and fractional reserve lending and paper Bitcoin and all that stuff. There is the example of gold, where the powers that be have a lot of control over gold. Like, basically, you cannot get delivery of your gold to your private locker to make sure that it's there unless you actually subvert the entire system and go straight to the foundry and get your gold from there and then physically store it in your lockers. So the risk of paper gold is pretty high because there is a lot of institutional control over the gold supply. I think that the example aside from gold that you could use would be mortgages and securities, mortgage-backed securities, because what happens with that is they all get lumped together in one giant spreadsheet, and then the risk gets diffused in terms of, hey, there's a risk of some of these failing, but they're all in this one big lumped together financial asset. And then if some of them go bad, then the rest of it's still okay, and they get marked AAA. There was not really a lot of reason that people couldn't go through and audit those systems, and still they got inflated to the point where we had a lot of a crash out. So I think that Vortex is right that we have ways of demanding settlement and demanding that these things are more transparent, but there is definitely a taste for this type of malfeasance in these institutional sectors. So I think that the best way to galvanize the space against this happening is really education, people knowing how to check different balances, people demanding settlement, people wanting to see settlement and stuff moving out of different places. We want to make it so that we don't get as lazy and complacent as we did in 2008 with the mortgage-backed securities crisis, because again, we would have been able to go through and look, just like in the movie The Big Short, somebody actually went and looked at the quality of the mortgages, which is the basis of a lot of the movie. He went and actually looked at what was going on. So let's take some notes from Christian Bale in that movie and make sure that if institutional investment starts getting into Bitcoin, that they're held accountable from individuals, which is the true source of accountability. Accountability is a feature of individuals. We want to try to make regulators and stuff the arbiters of accountability, but when a market is regulated, the first things bought and sold are the regulators, who then turn around and engage in capture. So that's something that we want to keep in mind as we're delivering our Bitcoin baby to these blood-sucking vampires.
Oh, for sure. They've made, so much money on the facilitating that kind of a debt-based economy. So there was a question again by your friend Hunter. He's asking, with Bitcoin adoption, how will that affect people paying off debts, or would debt transfer into Bitcoin? Which I think is a really interesting question and concept to consider, because, it is a very debt-based society, and people are very much people are very much accustomed to these things. So is that, like, I don't know if that's going to be almost like marketed or try to be applied to Bitcoin in a way to just entice people into it, or how do you think that, or if it will ever, hopefully not, enter the Bitcoin economy? Blake, do you have an answer?
Well, Bitcoin is not a system based on debt. It's a system based on keys. You have the positive right to settlement if you have the, quote, contractual agreement with the protocol to be able to settle out the certain amount of numbers that you have the right to move the numbers around in the ledger. So when it comes to debts, you would want to do borrowing and loaning in a fiat currency or denominated in the price of real goods. You don't want to short Bitcoin. You don't want to bet against Bitcoin because it's got these visceral swings up and down. I mean, if you're a day trader and you want to short or long Bitcoin and use leverage a little bit, I mean, you can do that, but I think that hodling is way more risk managed than going all in and then risking getting wrecked. So when it comes to denominating loans and debt, you want to do that like, if I want to take a loan, I want to pay back that loan in fiat dollars because it's inflationary. Or the middle route would be to use real goods, some type of copper or food or a car or the price of something that can be priced in other things. Denominating something in Bitcoin, like we don't want to have usury in our loan lending system because that's predatory. And in terms of if I was like, hey, I'm going to loan you something and denominate it in Bitcoin, and then, Bitcoin goes skyrocketing, then I get a lot more from you. That's pretty predatory. So I think that Bitcoin is great. It's a deflationary way to save money over super long time horizons when you can be away from it for a long time. Short horizons in Bitcoin can be akin to gambling. So you don't want to gamble on the price of Bitcoin. not really in the short term, and definitely not in the long term by lending it away or taking lending in it. So again, it could be really, really good for you to do that, but it would be predatory. And if you do it, it could be really, really harmful to you. So keep that in mind. You want to denominate loans in things like fiat money or in things like physical goods. So those things probably aren't going to go away anytime soon, and they do have certain places in the market.
Yeah. Shorting the market and getting wrecked is one learning lesson that some people just seem to need to learn over and over and over again. Vortex, do you have anything to add on the debt-based society that we're on and how that's going to maybe transfer into trying to get everyone to understand the values of Bitcoin and having a real asset in your hands? Is that going to be a hurdle you think people need to get over, or what are your thoughts on that?
So as Blake said, I mean, the current system, the current financial system that we have is a debt-based system, and Bitcoin is not. So, it's you have to as Adam Meister always says, value your wealth in Bitcoin. Make sure that you are valuing your actual assets in BTC, because that is the asset that's going to continue to rise, because that is the only limited asset basically in humanity that we have. The only actual provable limited asset, the only actual digital scarce asset in this new blockchain financial world that we have really is Bitcoin. So you have to make sure that you do loans and any type of thing like that with fiat currencies. Do not loan out your Bitcoin. You always want to keep your Bitcoin, and if you do loan out your Bitcoin, you better make sure it's a pretty high rate of return, because you want to make sure that you accumulate Bitcoin, because it is a limited supply. We are in this huge accumulation stage right now with Bitcoin. You just have to accumulate. That is the name of the game, because when in 10 years from now, the question that's going to be asked is, how much Bitcoin do you have? That's going to determine your place in society, that your ability to actually affect change in the world is how much value you have. And this is something that you're going to have to look into and understand for your children's sake, for your children's sake, so that we can value our wealth in Bitcoin, to make sure that we are passing these values on to our children. So again, don't as Blake said, you don't short Bitcoin long term. You really don't do that. Of course, there's day traders that are going to go ahead and do that, but this is the accumulation phase. So whatever you do, accumulate Bitcoin. And if you want, accrue debt in fiat, but don't ever accrue debt in Bitcoin. Continue to accumulate Bitcoin at almost whatever the cost at this point.
Very sage advice. So hopefully 2008 will be just like a little blemish, and we can teach our kids to value real assets. So maybe a little pivot. I haven't seen a whole lot of questions in the chat box, so maybe pivot a little bit to things that people are accustomed to, but maybe are not in their best interest. And so talking about usability with cryptocurrencies and blockchain, and mobile phones. Everyone is on their mobile phone. There's mobile banking. How do you see mobile apps and cryptocurrency playing out in the future with like security wise or privacy wise? There's backdoors and iPhones and things like this. Vortex, what are your thoughts on this one?
Yeah, so we were discussing this a little bit at the beginning of the show before we went live, and we just want to make the audience aware that this stuff is early. We are really early days, and especially when it comes to the security, and especially when it comes to mobile security. We are making strides with iPhone continuing to be more and more secure, keeping your data on the phone secure, and not actually sending that out a lot like what Google does. iPhone actually does enable you to have some form of encryption on your data on your phone. So that's great. But again, because it's so early days, we just aren't ready to properly secure our Bitcoin on our mobile devices yet. There's just too many claims out there of having unhackability, having an unhackable device, of having a super secure device. It's just too early to make those claims yet. It takes years for the market to vet through these types of claims, and it's going to be a while before we really have really secure big devices across the industry. So because eventually I believe that we're going to have Bitcoin on all of our devices. We're going to have it on our television, wherever we use value. So wherever your internet is, there's going to be Bitcoin. So whether that's your fridge are automatically ordering food for you, or your your house adjusting your temperature, whatever it is, Bitcoin is going to be there, and so it has to have to interact with somehow, because a big play for Bitcoin in the future is going to be this machine-to-machine type of transactions, where it's most of the transactions, I believe, in the future on the Lightning Network specifically are going to be mostly made by software, like not necessarily by individual users themselves. So I think that eventually we will get there. It's going to take some time, but just be really, really, really careful about security these days. There's only a couple devices that I ever even recommend out there, which would be the Trezor wallet and even the Ledger wallet. It's okay, but I really only feel safe like recommending the Trezor wallet, and of course now finally the Cold Card wallet that is out now from Rodolfo over there at OpenDime. But really beyond that, there's just not a whole lot that I recommend for securing your Bitcoin, because this is so early days. So just be really, really careful. Be really, really careful about those claims, and make sure to do the research. Definitely.
Thank you for those suggestions. It's super interesting about your fridge ordering food for you. That would be awesome. Blake, what are your thoughts on this?
Well, it's sometimes when it gets confusing in tech space, it's good to think about real life. In real life, like if you're going to have digital storage of value, your phone is kind of like your wallet. And your bank could kind of be like cold storage. You can load up your phone with a little bit of Bitcoin. You can go out and you can have it ready to send and stuff like that. But you definitely want to have certain security measures. You want to have 2FA that's not SMS based. So two-factor authentication can be a system where when you want to spend or interact with your coin, you need to have a code to do it. And some people are like, hey, we'll just send you a text message to do that. Well, the identity management systems at the phone company are like, hey, did you order this pizza or not? If you get a pizza that you didn't want, that's not a big deal. But like Michael Terpin, unfortunately, had a social engineering attack that went through the phone company that was able to unlock a lot of his things. I don't know if 2FA was involved or if it was increased social engineering and stuff like that. But you don't want to have access to too much stuff through your phone, just like you don't want to have too much cash in your wallet. There's a great book by Pamela Morgan called Crypto Inheritance Planning. And that is a great way of understanding how to secure Bitcoin on the long term. And so a lot of these use cases and stuff in the short term are going to be with smaller amounts of Bitcoin on your phone. And it would be cool to see, a Lightning implementation of some type of game where there's gambling or there's some type of a reward system, instead of just, watching ads and getting, extra gems for your mobile game. Maybe you could get like a really, really limited amount of cryptocurrency for swiping on things and stuff like that. And I think that the gamification of market signaling and game swiping and stuff like that, especially with microtransactions, could be pretty cool and pretty valuable. People didn't want to jump the gun and do it on Ethereum and clog it up. So I think that now that Lightning is getting more and more popular, there could be some room for use cases with that and with side chains where you could have mobile applications that can trickle cryptocurrency to your phone. Then you can offload that to a long-term storage solution. But again, just think of real life. Don't carry too much money in your wallet, especially if you're going to go out and be out on the town, because if you lose a lot of money out of your wallet or your phone, that's not fun. So keep that in mind.
Yeah, that is a very good advice too. You don't carry around your entire bank account in your back pocket. So especially something like cryptocurrency should be the same concept. Well, I think that's about wrapping it up for today. I really enjoyed this talk, you guys. I think it was a really great live stream. So Blake Anderson, thank you very much for giving us your time. Is there anywhere, or how would you like people to find you, learn more about you, what you're working on? What do you want to say?
You can find me on Twitter at Bitcoin Blake. You can go ahead and follow me. I follow as few people as I can. I don't have any lists curated or anything like that. So if you want to connect and have me connect back with you, I have a LinkedIn profile linked on my Twitter that you can click on, and I'll definitely go ahead and connect back. And if you want to send me questions or anything like that, LinkedIn is a great place to do that. I try to keep my Twitter inbox as low as I can. I try to interact with Twitter as infrequently as I can. A lot of the followers that I have on Twitter are from doing social media appearances and appearing in person. So I also don't tweet a whole awful lot. About once a week, I'll generally tweet about the ongoing economic collapse of the global debt bubble, and then how it could be shored up by different types of diversification and digital storage of value. So at Bitcoin Blake, you can see my cryptographic economist stuff about why Bitcoin is good at expanding the circle of trustlessness, and about how the legacy debt economy is becoming pretty unstable.
I must say, you have an epic pinned tweet on your profile. How people say it's deep. It's a good one. Most people die at 25 and they're buried at 75. That's a thought nugget right there. So
Benjamin Franklin, and Ben Franklin is actually my dog's name. So I like Ben Franklin so much that I named my dog after him, and then I have a pinned tweet quote from Ben Franklin. So hats off to that guy.
Very nice. So Vortex, thank you for your time also today and for helping hosting and organizing all this. So where can people find more about you, what you're working on? What do you want people to know?
Sure. So, of course, when Blake says recommending diversification into digital value, he just means buying the hell out of Bitcoin. But yeah, absolutely. I just try to. I wish I could use as many words as Blake does, but I can't do it. I can't do it. I'm not that smart. So, thanks again, Blake, so much for your time, man. And again, thanks, Heidi, for hosting this. I really appreciate it. I had a great time. As always, this is our second episode, and I hope that everybody had a good time here answering questions. We answered a good number of them. We tried to go for about an hour, so I think we definitely got that here. But yeah, you can find, of course, more information about me at the1vortex, all spelled out on Twitter. I am the exact opposite of Blake. I'm on Twitter all the freaking time. I have open DMs. It's a sickness with me. So if you guys don't want to have too much tweets in your timeline, probably don't follow me. But of course, you can always find more information about CryptoCast at the website cryptocast.network. Where we have our links to all of our shows and the RSS feed, the audio feed, if you guys prefer to just listen to the audio only. And of course, will be the next show here on the network will be the Bitcoin News Show this Sunday, where we have a couple different people, including the one and only Mr. Kevin Pham. So I'm pretty excited about having Kevin on the show and asking him some questions. So that should be a good time. But yeah, again, really appreciate everybody joining us in the chat. Hopefully everybody had a great time.
Yeah, I think it's all copacetic. So thank you for everyone in the chat for taking the time to write your questions. Have a great conversation, and we will see you back here next Thursday. So have a good one.